Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday, the 24th of May, 2021. And we're looking at gold and silver's advance and asking, has the recent rise further to go before May and June are out? We certainly think so. So let's take a look. Now, yesterday we produced two videos, Bitcoin versus gold and silver episode 19, Bitcoin and cryptos keep falling, and just 50 companies dominate the global economy. And on Saturday we produced a video entitled Gold and Silver Weekly Update for the week ending the 21st of May, and on the Richard and Greg channel, What is Happening at the BBC. And we've placed links to all of these videos, the four, in the description box below. Now, in our weekly update, we forecasted the following, quote, "So our gold and silver trading range for this coming week is strengthened slightly, with gold between 1800 and 1900, with 1750 and 1975 as outliers, and silver trading between $27 and $28.75, with $26.50 and $29.50 as outliers." Well, earlier today, a few hours ago, Bloomberg reported the following. Bloomberg article dated May 24th at 10:20 a.m. GMT +1. Headline: Gold holds near 4-month high amid bullish investor sentiment. Gold steadied near the highest in more than 4 months amid signs that investors are turning more bullish on the precious metal. Hedge funds raised their net long position to the highest since January, data showed on Friday. Bullion-backed exchange-traded funds have seen inflows in May, following 3 months of sales, according to data compiled by Bloomberg. Gold rose in the past 3 weeks as investors weighed inflation risks and spikes in coronavirus cases in some countries. Market-based gauges of inflation expectations have eased lately, though concerns linger that the post-pandemic recovery could stoke price pressures and force a pullback in central bank support. Investors were also weighing the extreme volatility in Bitcoin, which may have lent an added pillar of support to gold. Gold prices are trending higher as weakness in cryptocurrencies and rising demand for inflation hedge assets buoyed the appeal of the precious metal, said Margaret Yang, a strategist at Daily FX. Recent ETF data showed that investors are stockpiling the yellow metal for the first time since January, underscoring rising appetite. Spot gold lost 0.1% to $1,879 an ounce by 10:19 in London after reaching $1,890 last week, the highest since January the 8th. Silver was little changed, palladium rose and platinum declined. The Bloomberg dollar spot index was steady. The recent move lower in real rates, accompanied by further US dollar weakness, have been the key drivers of gold's rebound, Morgan Stanley analysts, led by Susan Bates, said in the note on Monday. Still, we continue to see a risk of a sharper sell-off similar to that seen in 2013 once tapering begins in 2022. But in our base case, we assume prices remain supported in the $1,600 level per ounce until the first Fed rate hike. Former Treasury Secretary Lawrence Summers said cryptocurrencies could stay a feature of global markets as something akin to digital gold, even if their importance in economies will remain limited. Former Treasury Secretary Lawrence Summers said cryptocurrencies could stay a feature of global markets as something akin to digital gold, even if their importance in economies will remain limited. Cryptocurrencies offered an alternative to gold for those seeking an asset separate and apart from the day-to-day workings of government, he said. End of article. A number of hours later, the time of our writing this, which is around 1800 GMT +1, we can see that gold has whipsawed today between $1,876 and $1,887, with gold now standing at $1,884. Silver's done better proportionately and has moved between $27.50 and $27.93 and currently stands at $27.74. Now, those who listen to our weekly update will be aware that no US economic news or data is being published today. And we can see from the Bloomberg spot dollar index, it has in fact weakened nevertheless by 0.1 to 89.91, while equity markets have risen quite strongly today. The Dow is up 192 points, or 0.56%, at 34,400. The S&P 500 is up 40 points, or 0.97%, at 4,196, and the Nasdaq is up 181, or 1.35%, at 13,652. And we can see across Europe as well that most markets are up there and have closed appropriately. Now, gold appears to have held firm, but silver has risen. And the next target, from a technical point of view, is to see it rise, or at least aim to rise, to $28.30. It's got to pass that $28 level first, of course, but at the end of the day, it seems to be doing very well. And potentially, $28.90 cannot be ruled out thereafter, though we suspect that until either some geopolitical event occurs or some economic data is announced later this week, it needs that catalyst in order to shoot it forward. We still maintain, though, that just in case adverse news is announced, silver will be quite fully supported at the $27 level. Now, some interesting announcements reported today in that billionaire fund manager Ray Dalio has expressed that he prefers Bitcoin to bonds, as in his words, all currencies have died. And we can see that Bitcoin has in fact risen today by some $2,250. It did have a tremendous fall last week and the week before, and it currently stands at $36,682, some $6,500 higher than its recent low. Precious metal pumper John Williams, sorry we call him that, he calls himself an investment analyst, but he's been pumping precious metals ever since we've watched him. He warns of hyperinflation, stating that the Fed has lost control. No fear there then. And iron ore futures and other basic metal prices have fallen as Chinese regulators attempt to halt the commodities boom. Now, we've actually produced a link to that Bloomberg article highlighting about basic metal prices falling. It's a few minutes long, and we've put it at the end so that if you choose not to listen to it, you can do so without it affecting the rest of this video, as it is focusing more on base metals as opposed to precious metals. Now, our only concern at this stage is that the recovery from the pandemic is stalled or a new wave of coronavirus occurs. And if that doesn't happen, and we hope it doesn't, then we expect to see silver in particular benefiting quite significantly as industrial demand picks up. Now, as mentioned earlier, there's no significant economic data in the US until the latter part of the week, but we shall be reporting on what is happening in Europe and elsewhere during Tuesday and Wednesday. So please don't miss those videos. Meanwhile, do share your thoughts. Let us know what you think is going to happen to gold and silver, and will silver outperform gold this week? But meanwhile, thank you so much for listening. Don't forget, in a moment or two, we shall be providing the Bloomberg article. And if you haven't done so, do subscribe to our channel and press the bell sign so you're notified of our videos as and when they're published. So let's go over to Bloomberg. Bloomberg article dated May 24th at 4:25 p.m. GMT+1. China targets speculators and hoarders to stop commodity boom. China stepped up its fight against soaring commodity prices, summoning top executives to a meeting that threatened severe punishment for violations ranging from excessive speculation to spreading fake news. The government will show zero tolerance for monopoly behaviour and hoarding, the National Development and Reform Commission said after leaders of top metals producers were called to a meeting in Beijing with multiple government departments on Sunday. The push to rein in surging metals prices rippled across markets, with steel dropping as much as 6% and iron ore tumbling by close to the daily limit before prices steadied. The warning from the NDRC comes as a broad surge in commodity prices fuels fears that faster inflation could dent economic growth in China and beyond. Investors have been piling into industrial metals on bets that the world will rebound strongly from the pandemic, but concerns about the knock-on impact on demand are rising as manufacturers are forced to raise the cost of finished goods. It might not be great for the speculative community, but it's good news for the world in general, Amelia Xiao Fu, head of Global Commodity Strategy at BOCI Global Commodities Limited, said by phone from London, "I think prices could become calmer and the room for excessive rallies may be limited." There's been a steady drumbeat of government warnings about the consequences of commodity prices that are near the highest level in almost a decade. But aside from changes to trading rules at futures exchanges, there hasn't been a lot of action. Beijing is likely to face a potential exhaustion of policy options to restrain the rally, Citigroup Inc. said in a note. In targeting commodity prices, authorities are fighting trends over which they have only partial control as the world economy reboots with supply chains stretched. The government is also tackling the consequences of its own efforts to reduce greenhouse gas emissions, which have contributed to price gains. With policy risk shifting towards government intervention, prices will surely be affected by market sentiment, said Li Yi, an analyst at Shenyang Wangguo Futures Co. in Shanghai. The rapid surge in commodity prices has badly affected manufacturers and market orders, leading to losses and default. The NDRC's statement is the toughest comment yet from the government, which started warning about higher raw material prices in April. The officials from the iron ore, steel, copper and aluminium firms that met with 5 state agencies in Beijing on Sunday were told excessive speculation and rising international prices were to blame for recent advances. Key enterprises should actively fulfill their social responsibilities and take the lead in maintaining market order, the NDRC said in a statement. Do not collude with each other to manipulate the prices, fabricate and disseminate price increase information, and do not hoard and drive up prices. There's been an unusual amount of attention from policymakers on commodities in recent weeks. China's factory gate prices rose at the fastest pace in more than 3 years in April, sparking concerns that costlier raw materials could hamper the economic recovery or feed into higher consumer prices. The deputy governor of the People's Bank of China pledged a basically stable yuan in a statement on Sunday, right after another central bank official said the currency should appreciate to offset the rising cost of commodity imports. Comments from the official were later deleted. The drive to tackle rising material prices comes after China's V-shaped demand rebound last year helped ignite a global commodities rally. Stimulus support for metal-intensive sectors is showing signs of cresting, however, and authorities are now starting to worry about imported inflation. That Beijing is also dealing with a problem partly of its own making is most evident in steel, where prices spiked to records after the government set targets on output curbs and ordered production to fall this year. Instead, output surged to record levels in April. Another week, another Chinese government announcement trying to soothe the self-inflicted wounds caused by regular statements on steel capacity reforms, which fueled steel prices and margins, said Attila Widnall, managing director at Navigate Commodities. Chinese steel rebar futures closed 2.7% lower. Hot rolled coil and iron ore also fell, with iron ore losing more than 7% at one point before pairing declines. Base metals were mixed. Lead, tin and zinc slipped on the London Metal Exchange, while copper, which lost as much as 0.9% earlier, rose 0.8% to $9,962 a tonne at 3:51 p.m. in London. Prices slid 3.5% last week, the most since September. End of article. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.